All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Appreciate you joining me this morning. I apologize for being about 5 minutes late. We usually do it at 9 a.m. Eastern Standard Time. I was looking for my AirPods. I'm the worst. I have to look in the bedroom for them. Good morning again, May 18th, 2022. Bottom right hand corner of your screen, white logo. Click on that. Turn notifications. Subscribe to our channel. Like our videos, appreciate it as always. The big news today was Target. Wow, Target down. Let's go ahead and get the numbers. Target stock is down 25%, 24.8% pre-market. Let's go over on exactly what the heck happened with Target. Here, I'll go ahead and read it to you. Target reports $2.19 EPS. Revenue did beat. Cuts fiscal year 22 operating margin outlook reflecting actions to reduce excess inventory. We talked about that. A lot of people, or a lot of companies did not want to build inventory during 2021, thinking that demand would not be strong enough. Keep in mind, very, very important. So you have to kind of look at these companies as okay. We're going to boost up our supply chains or boost up inventory, or we're just going to go ahead and keep inventory lax, which is going to keep the supply and demand balance imbalanced, right? To reduce excess inventory as well as higher freight transportation costs. That's crude. So again, what is happening? Walmart had this worst day since '87. Target had its bad day. I thought Target would have a decent day. Obviously, I said yesterday that I think Target would be fine. My wife shops there a lot. Obviously, that didn't make a difference. But Target, wow, a consumer staple, right? Or a consumer defensive. Let's go to the actual heat map. We talked about this yesterday, if you guys remember. The consumer defensive, right? Very, very important. Let's see year to let's go to today the performance, and you could see this morning. Look at the defensives, guys. Red, Costco. Again, I own Costco. Walmart red. Yesterday, Dollar General, Target. Again, the defensives. Again, they really, really popped during the kind of fall that we've had to about 19% S&P. Again, we know those are the defensives. Those are the staples. No matter what, something happens, people are going to shop at Walmart, Costco, Target, get Coca-Cola, drink PepsiCo, use Procter& Gamble shampoo and toothpaste. We know that. But have they gotten too high too fast? My issue is that they're too expensive. I like Target stock. It's too expensive. Now we're going to have a lower PE ratio, 15.27. That's going to come down a little bit with EPS, and the dividend yield is going to go a little higher. Granted, they keep the dividend yield. Would I buy Target here? Hey, at a 20% discount, let's go ahead and wait a little bit. But again, I like it. I'm not saying 20% clip ain't bad, ain't bad. And I'd rather own Target than Walmart, to be honest. So let's go ahead and do some numbers. 161. Let's go on the daily. Let's see if there's any gaps together. Ah, we found one. Here we go. That's what I was telling to the bloggers yesterday. If you ain't got nothing going on and you're just chilling, start getting some screen time, guys. Pick a couple of names, get a watch list together, start working on your gap fills. At least that. It trains your eyes to keep looking for what's next. Well, we filled this gap, that's for sure. Well, 201, because we're going to open at 161. 140, 140, that downward gap on the hourly, on the daily. I think I'm a buyer there. I think we're going to lower EPS, and I'm okay with buying there. I think that's a decent level. Let me go ahead and figure out exactly what level this is. Let's say 139.80. 39.80. Let me put the alert for you guys. And that should be right at that, pretty much at the gap fill. You could see it. Pretty much exactly the level. Let's go ahead and bring up a longer time frame for those who do like Target or are looking at a Target. Not much on the weekly in terms of gap fills. 20 years. Yeah, we haven't seen a level like this since 2020 of last year, if we get to 140. So I'm okay with buying at that level if we get there. Again, let's go back to the daily. We'll go to the 2-year daily, give us a little more leeway. And again, no gaps to fill until we get to 139.40. That was the August move on earnings. Let's see if we get there. That's what I'm looking for. But again, not good. Let's take a look at Walmart and see if there's any gaps to fill either. That's major support here, right around 133.05. We are now below that. So let's see if we do bounce. We'll go to a 3-week chart. Any gaps to fill? Nope. We'll go to an even longer. Nope. That's it. So your next support here would probably be 125.98. Again, I'm not the biggest Walmart fan personally. Again, nothing against Walmart. It was one of our top 10 stocks of last year. But again, not something that I want to keep personally. Honestly. So again, nothing against Walmart. I just think now they're just a little expensive on the actual defensives. Costco is something I'd rather own long term. I actually don't even shop at Walmart. I shop more at Target and Costco than anything else. So again, I always have been in that kind of boat of always kind of shop for companies that you do business with. Don't try to invest in a company that you don't understand or you don't do business with, because you're gonna get hit. Let's answer some questions here. John is asking thoughts on Apple for today after closing yesterday, but it's down pre-market. Yeah, it's down with the market. Let's see. And that's what I spoke about yesterday. I think Carmen was asking that question yesterday. 150.11 is the target. I have 150.41 as an alert. There is a gap to the fill to the upside, 149.23. Let's go ahead and take a look at the VIX together. You can see a nice little bounce. It is above 27.32 now. I'll remove that alert so I don't have to worry. Did fill that gap. Now we're talking about 2018. Let's see if it doesn't get there, or it does get there and rejects. Remember, you still have this upside gap on VIX still, 31.69. So again, I don't think that the market is at its bottom yet. I still think 37.50 with a 17 times forward multiple on a 3-year yield seems about right. I think that's fair value. I think around there is fine to buy shares, but not yet. I still have some calls though. So again, I am watching to see if the VIX does break, or does S&P futures retest the 200-day, which we did yesterday. You can see we retested and then we bounced. And let's see if we can get around 40.20, 40.19, and see if we hold there. Again, I'm still looking for 41.01. We were at 40.94 yesterday, right around 7 p.m., and then kind of faded as Europe sold off this morning. In terms of, give me a second here, in terms of the totality of the market, the VIX is up 5.44%. The dollar is up slightly, but nothing crazy. Commodities are down. 10-year yields still below 3, still below 3. Crude is up 1.36%. Gasoline is flat. Russell is down 1.18%. Nasdaq down 1.5%. Dow up down 0.86%. Remember, Walmart is a big piece of the Dow. Target is not part of the Dow, so Target is not going to affect the Dow today. It is going to affect the S&P. It's part of it, but again, it's not a Dow component. Gold down 0.35%. Silver down 0.51%. Bitcoin below 30,000, 29,455, 1991 for Ethereum. Do you see more downward movement in the S&P? For the S&P, if we can just bring up the S&P futures, that's really the thing I look at. 40.20 is your first support. Next support will be 39.75. If 39.75 breaks, this right shoulder is basically invalid, and we're going to go lower. So 39.75 has to hold, but 40.20 is my next level for support. Morning Carl's thoughts on SPY or actual SPY calls. Looking at SPY here, again, the next level, we're going to kind of stick with this analysis on ES. 397.82 is your big support. If you break that, that's your right shoulder of the inverse head and shoulders being broken. I don't think it does. And in terms of next support, again, I'll keep it right at 40.20. So that would be like around 42, 40, 401.14. But for calls, again, we need to get above 410.54, Carmen, to get above 410.54 on SPY. That's the level I'm looking for. We're testing major moving averages now. Look at NASDAQ futures down at the 200-day moving average. So we're getting a lot of movement this morning. Let's take a look at some pre-market movers together. We haven't done that in a while. Pre-market movers, remember? Let's take a look at it. Target down 25%, like you saw. Out of those, that's the only ones that I know. So Apple, Walmart, Home Depot. Home Depot had a great quarter, by the way. I like Home Depot. Microsoft, we know that's a big part of S&P. Boeing's down, Disney's down, Walgreens Boots down. Pretty much red across the board. Nike's down 3%. AMD down 2.28%. TJX down is up 5.73% though. So I don't know if they had earnings today. Nvidia down 2.49%. Tesla down 2.16% as the world turns with the Twitter deal. And Nasdaq, you can see 5.5% down for Costco. They are kind of lumped into with Target as consumer consumer staples, consumer defensive. We know the drill. But that's really what's standing out. Amazon had a nice boost yesterday. They're down 3.44% this morning. So let's see as we get up, down, up, down, up, down in the market. If we hold these levels, that's really the key. You can see S&P again right near 40.20. NASDAQ right near that 200 day of 12,347. 12,200 is my next support. So again, it's really just kind of building your levels. Make sure to get some screen time, guys. It's all about what more are you doing? Are you doing the screen time? At least do 3 charts a day. It's kind of like a muscle. It's kind of like working out. You get used to it over time. I suggest starting with just looking for gap fills, looking for those gap fills. We found one on target together. Take a look at it. Let's go ahead and expand target one more time. We'll go to a 2-year daily candle, and you could see gap to fill right here. You can just do that. You can just add those gaps, highlight them. There's one here too as well, but that's going to break due to pre-market. So again, 140. I think I will dip my toe into some target. Definitely see those PE ratios updated later today, or if not, at the open. So if that's being said, again, a lot of market movement. Yesterday was a nice day. Let's see what we get today. Yesterday, the NASDAQ was up 2.5%. Now it's down 1.5% pre-market. Again, I'm all excited about technical patterns. I'm all about excited about a green day. But again, I'm looking at more of why are these things happen in terms of what's next, what's to come. Again, inverse head and shoulder pattern. If we break below 39.74, that breaks that right shoulder. Again, could we consolidate here and then still go higher? Sure. But again, it just really depends on the price action that we get. Have a great rest of your morning. Enjoy it. Happy Wednesday. GARcapitalfx.com is the website. We will catch you later on today for the aftermarket recap. Cheers.